Hey, what's up everybody? Wanted to give a quick update on the SEC's new guidelines that affects all investors. If that's not you yet, it should be. So let me fill you in. There's this thing in the investing world called crowdfunding, and you might have heard of it and think of it as this way that weird products or quirky new products get startup capital. And it is, but it's also so much more. So crowdfunding allows you to get in really cool investment opportunities with small amount out of pocket and get actual ownership in the equity, just like buying the stock of a more established firm. And for the sponsor or person raising money, it allows you to go out to the public and gain capital from a lot of different sources without having to do an IPO and registering through the SEC, which is usually expensive and a lot of legal work. So the current SEC guidelines that are in place but are soon to change have really limited the effectiveness of using crowdfunding as an option to raise capital. And what those guidelines are is pretty in-depth with the numbers, and I'll skip over that. But basically for non-accredited investors, 2/3 of the American population was limited to invest only $2,200. And then very few, still non-accredited, can invest only 5% of the lesser of their annual income or net worth, whichever was lower. And accredited investors, those who make or are worth over $1 million, or who make over $200,000 a year as a single person, or over $300,000 as a married couple, could only invest up to 10% of the lesser of their net worth or their annual income. And under the current SEC guidelines, the total amount that you can raise is capped at $1,070,000. And in the real estate space that I'm in, that really limits your options on the kind of properties you can go after and purchase using crowdfunding. Especially in commercial multifamily where I am, there's not many big apartment complexes that are less than $1,070,000. So here's a big takeaway. The SEC has elected to change these rules and raise the raise limit to $5 million now. And that's really big news, because think of the impact going from 1 million to 5 million can make. In the real estate world, it's all about leverage and using debt to compound your return. So now when you're raising $5 million, you can leverage that as a down payment to purchase a property that's $20 or $25 million, depending on the loan of value. Big deal, right? So now let's talk about the new rules for the investors and what they can put in. So for non-accredited investors, they can invest up to 10% of the greater of their net worth or their annual income. So for example, if somebody has a net worth of $900,000 but only makes $100,000 a year, which is still a lot, they can now invest up to $90,000, which is 10% of the greater value. When per the previous guidelines, because they made $100,000, which it was based on the lesser amount, which was under the $107,000, they could only invest $2,200. So going from $2,200 to $90,000 of investment potential impacts investors significantly, especially when they find a really good deal and want to capitalize on it. And for accredited investors, there's now no limit. So in theory, one accredited investor could bring up to the whole 5 million. So this is big news for the people who are going to be investing in these deals, and the sponsors to be able to go out and get more capital from the right people who see these opportunities. Another cool aspect about these new guidelines is that there's now a test the waters provision, meaning that sponsors can test the waters and generally solicit or advertise their offerings before they ever file. So that means they can get a feel for investor sentiment, get feedback based on their preliminary offering before they actually pay to file the Form C, part of the Regulation CF. So that's a big change as well, because they can get the word out before they ever spend any money. And this isn't new for Regulation CF or crowdfunding, but sponsors can actually advertise. This wasn't a huge piece before because the amount that you could raise was very limited, but now with that $5 million raise, the ability to go out and talk about it and get in front of people and to have unlimited people get into your deal, that's a big deal. So let's break it down. So up to the point of these new guidelines coming into place, and in the real estate world, in order to advertise, you had to spend $15,000 minimum on a private placement memorandum and only be able to advertise to accredited investors. So that really limits your buyer pool. But with Reg CF under section 227.204B or Rule 204B, sponsors can advertise with certain right and left bounds. So under Reg CF, the sponsors can now, 1, advertise that they have an offering, and 2, the name of the intermediary where that offering lives, and in the Reg CF world is regulated by the SEC. So what that means is there's online portals or intermediary platforms, as they're called, like Realty Mobile or Equity Door, similar platforms where that offering lives, and you have to go through them. So you can talk about your offering, talk about the name of the intermediary that you are using, and the third thing is the link to point them back to that intermediary so that they can see your offering and ultimately decide if they're going to invest in it, and from there actually put their money in the deal. So now to bring it all together, I think this is going to make a big impact for the future of capital raising, not only for investors and the people looking to grow their money in these passive deals, but for sponsors as well, looking for a bigger pool of potential investors to bring into these deals. And I think the early adopters are going to make the most progress, because right now this is really new. They're just changing the guidelines. These don't take effect until March. So I think now is the time to do your research and get into these things. I mean, for the longest time, deals like big commercial real estate deals, which this opens the door in a big way for, were really saved for, the super rich, the really wealthy. And I think if they're investing in stuff like that, and this gives you the opportunity to with lower capital, it makes a lot of sense. Crowdfunding, I think, is going to be how the common investors like you and me are really able to make a big impact in the space. Hey, if you liked the video, click the like button and then share this with somebody who you think will get value out of it. I put this together to educate and help open the door to real estate investing for everybody, like I'm saying, the common investors. And Regulation CF or crowdfunding is a great way to do that. So I hope you guys can take advantage.